2.8% on the prior 2.8%, with a range of 2.9 to 2.7%. Core PCE price index month on month forecast 0.2% on the prior 0.1%, with a range of 0.2 to 0.1%. US consumer spending month on month forecast 0.5% on the prior 0.4%, with a range of 0.7 to 0.4%. US employment costs forecast 0.9% on the prior 0.8%. US personal income month on month forecast 0.4% on the prior 0.3%. US real personal consumption month on month forecast 0.3% on the prior 0.3%. We also get Canadian GDP month on month forecast minus 0.1% on the prior 0.3%, with a range of 0.2% to minus 0.1%. We also expect comments from Fed's Bowman, who gives brief remarks on the economy and her perspective on mutual and community banks at the Northern England Summit. Text is expected.
Hello, 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 and welcome to another episode of Scotch and Stock Steel Series. Let's just exit that then, and then start it up again. They need to fix that. They need to fix that. Let's go to properties again, and that should have fixed. So, hello, 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 and welcome to another episode of Scotch and Stocks. Thanks for looking out. Thanks for looking out.
'Voice news disconnected.
We're connected back again. We're 2 minutes away. Actually, a minute away. So that should be quick and easy. Let's get it in there. So much. Oh, I need to make a bunch of boys.
1 minute remaining. I'll lead with US PCE price index year on year.
Oh, 50 seconds before we get data. Well, let's do this. Leroy Jenkins.
Ten seconds. 2.6%, 2.6% as expected. Price index month on month, 0.3%, 0.3% as expected. Canadian GDP month on month, minus 0.2%, minus 0.2%. Lower than forecast, minus 0.1%. Core PCE prices year on year, 2.8%, 2.8% as expected. Core month on month, 0.2%, 0.2% as expected. Consumer spending month on month, 0.7%, 0.7%. Higher than forecast, 0.5%. Seeing some whipsaw in the S&P, a little bit of upside in the dollar. So US personal
Hello,
income month on
hello.
month, 0.4%, 0.4% as expected. Real personal consumption month on month, 0.4%, 0.4%, higher than forecast, 0.3%. US employment costs, 0.9%, 0.9% as expected.
Huh, everything came in line with expectations. I think this cements the week.
So Fed
Everything's
spokesman
going
says the
according to
labor
plan.
market is not especially tight, but wage growth is still consistent with 2% inflation target, and current policy is in a good place for the Fed to monitor data and be clear on economic impact of Trump administration policies before moving rates again. So rate cuts will still expected this year, but the future moves should be cautious and gradual with time to assess data. Current policy is in a good place for the Fed to monitor data, and it's not clear monetary policy is exerting much pressure on the economy, with easy financial conditions and high asset prices possibly slowing progress on inflation. Watching long-term treasury yields as possible sign markets are expecting tighter policy will be needed to control inflation. First quarter data is important to how quickly inflation will improve going forward. Fragility of supply chains and geopolitical tensions and release of pent-up demand post-election, as well as other factors, could also feed inflation. See US 10-year Treasury yields rise after PCE data, last at 4.535%. US short-term interest rate futures are lower after the data. Traders continue to see the next Fed rate cut in June. Dollar yen edges up, last up
Where's that
0.4% at
point two, man?
154.9.
That's so weird.
So, new acting chairman of Libya's National Oil Corps says he will work to boost crude production and improve transparency.
Market did nothing on this. I got that's data is good. It's just a 2.4%.
Eurozone government bond yields
Oh,
roughly unchanged.
nice. Food is getting ready. Hopefully that continues. Echo, set up a timer for 60 minutes. Man. Hola. What is the trade today? There's really no trade today. Any more data that we're expecting? Nothing. We got the Chicago PMI, but we have like oil earnings too. Oh man. I think that's it, guys. Thanks so much for watching. Our market's gonna be up today. I mean, the data is okay. Everything is in line as expectations, so that takes away a little bit of the fears of inflation and potential rate hikes, which is good. Still December data, so market's hoping that continues into January and February, right? So we got to keep a close eye. There is a little bit of fear in the commodity index going up, so I think it's up 4%. So we have to like, well, double check, triple check, but yeah, seems good. Seems good. All right. Thanks so much for watching, guys. Peace out.